Decentralization, human flourishing, and the blockchain. This video discusses how decentralization and blockchain technology can promote human flourishing. At Good to Know, I read the books and articles that you don't have time for. The title for this video came from something that Max Borders said in his book, The Social Singularity. What we're really interested in here is flourishing, or more specifically, how people can organize themselves to improve their well-being. The extent to which we can organize ourselves to be happier, healthier people is the extent to which we can organize ourselves to create more peace and prosperity. In the previous video, we learned from the World Bank that about 1.7 billion adults remain unbanked, without an account at a financial institution or through a mobile money provider. We also discussed Michael J. Casey and Paul Vigna's book, which pointed out the difficulty these people face by not having any record of a personal financial history. With no bank, they have no such record. It's made more difficult by the fact that 2.4 billion people do not have an official form of ID either. This is again according to the World Bank. No ID, no record of a financial history, no access to a bank, and acquiring the financial services so many of us take for granted becomes problematic. So, given this centralized model, what are 1.7 billion people to do? Regarding the lack of IDs, some centralized government strategies could certainly be helpful. Take India, for example. There, the national government has embarked on a gargantuan task of identifying every one of its citizens, tying them to a digital record of their biometric details, primarily fingerprints, and attaching that information to a massive centralized database. In the Truth Machine, it says, as of this writing, this system, known as Aadhaar, has assigned 1.1 billion unique ID numbers, with 400 million of those assigned to bank accounts. Once a person can be recognized in a financial system because they now have an identity, they can begin building a personal history or reputation. Some blockchain developers are helping people in poorer countries gain credit and build a financial history and reputation through Dapps, or decentralized applications. One such DApp, for which Michael Casey is an advisor, is WeTrust. WeTrust creates blockchain-based lending circles promoting financial inclusion and lay the groundwork for new financial tools for unbanked and underserved people throughout the world. So what is a trusted lending circle? Numerous members of a community, we have just a few pictured here, but this is for the explanation, but understand it could be many, even hundreds, that help each other do even more than get by with little help from their friends. The name is Trusted Lending Circle. But the trust does not come from knowing and trusting the individual personally. It comes from a smart contract and the distributed ledger on the blockchain. What does that mean? Well, there's not enough time here to explain a blockchain, but for starters, this ledger does not exist at some central location, such as a bank's centralized server. No, it is a type of decentralized ledger that lives on numerous computers simultaneously. No single storage device holds or controls a master copy because there is no master copy. But it's even better than that. It's distributed, existing in the blockchain on hundreds of computers or more. And those computers, called nodes, are located around the world. What makes this blockchain distributed ledger so powerful is that even though personal ID information is encrypted, everyone can see the ledger. So it's completely transparent, which means that a bad actor cannot corrupt the information without being seen by everyone, so they'd be busted. Now may be a good time to clarify a term often applied to the whole blockchain distributed ledger smart contract world, and that term is trustless. When you hear this term, it means that because the technology is distributed, transparent, and immutable, a participant does not need to depend on trust. The system is much more difficult to cheat in and hack than the banking systems everyone is using presently. That at least gives us a vague preliminary understanding of how a blockchain can be used. Now, smart contracts is a voluntary agreement entered into by two or more people, All contract terms are written as code. The contract is stored in a blockchain, so it's transparent and immutable. And finally, it executes itself. It's a smart contract. It's automatic when events are triggered. It doesn't require an intermediary, such as a bank. It's decentralized, and the transactions can be executed for fractions of a penny. So understand that having financial transactions operating through smart contracts on the blockchain is what decentralizes them, which makes the bank and their substantial fees unnecessary. It secures them on the blockchain through the immutable distributed ledger and provides these services cheaply through self-executing smart contracts for fractions of a penny, not dollars. Now, back to trusted lending circles and WeTrust. The smart contract would stipulate a contribution amount, a contribution period, perhaps monthly, and the rules. So every member contributes monthly, say, and each and every month, some member wins the total monthly contributions of the group. The winner could be decided by random or by what is known as a reverse auction. The main point is that the group is better off because every member will receive a payout, perhaps even interest-free, in a shorter amount of time than it would have taken them to save the money by themselves. Except for the last person, who would receive their money in the same amount of time it would have taken them to save it up on their own. However, if the group continues through another cycle, they would get their money earlier next time. The members only need to continue with their monthly contributions in order to receive lump sums from the collective savings. In Don and Alex Tapscott's book, Blockchain Revolution, they introduce us to Joyce Kim. Joyce Kim co-founded Stellar Development Foundation because she believes that financial access is a prerequisite to fulfill all human rights. The Stellar Network, an open-source internet protocol for money, facilitates access to financial services anywhere in the world. Joyce has spoken at the United Nations and World Bank on how open networks can help increase economic access. She was selected as a PopTech Fellow for her stellar work. In Blockchain Revolution, Joyce Kim tells us about some fishermen with little money that she met in Nicaragua. They form fishermen crews where one person will get a loan for the net, somebody else will get a loan for the bait, somebody else will get a loan for the boat, and somebody else a loan for the motor. And then they come together and form a crew. The model works, but it involves as many middlemen as there are fishermen. And those intermediaries in this centralized model, which give them the loans, charge fees that are significant relative to what they earn from their fishing venture. Financial structures, such as trusted lending circles, which could provide the money for this fishing venture with almost no fees, so no bank needed, and decentralized financial service structures that provide money transfers in seconds, again with almost no fees and no bank needed, provide the banking services we all take for granted and allow these people to access capital, keep more of their profits by using these Dapps, these decentralized applications, escape the poverty trap perhaps, and begin to actually flourish. Now, you might be saying to yourself, aren't people accessing these apps using a cell phone? Isn't that a cell phone there? How will people in these poor countries access these Dapps without a cell phone? They don't have cell phones, do they? It turns out that just as developing countries have been bypassing the construction of centralized power grids and skipping right to solar and wind generators, they are skipping the construction of landline phone systems and moving straight to cell phone technology. According to the Open Mind website, the International Telecommunications Union, a part of the United Nations, in 2017 said the penetration of mobile line subscriptions reached 98.7% of the population in developing countries. In nations with lower or medium-level economies, there are more people with access to mobile devices than to water or electricity. And again, this is citing World Bank data. Therefore, these decentralized applications and the financial services provided by them can literally be at their fingertips. One more example of a DApp, decentralized application, comes from an organization named Celo. Celo runs a DApp, decentralized application, on a blockchain. Its purpose is to make financial tools borderless, easy to use, and accessible for anyone with a mobile phone. This is where I need to say, in full disclosure, I'm not getting paid by Stellar or Celo. Now, in transparency, I will say that I purchased a small amount of Stellar tokens and Celo tokens, which are cryptocurrencies. And I'm not saying anyone should invest in these cryptocurrencies. I just purchased a small amount because I believe in their mission and I'd like to see them move forward. On the Celo website, they have posted a little success story explaining how Celo helped a small community of Philippine weavers to access international markets. While the money earned from weaving doesn't guarantee a way out of poverty, it has provided the weavers with 3 meals a day and schooling for their children. But when the coronavirus pandemic hit the region in early 2020, it changed everything. Fewer tourists, because of the pandemic, caused their retail clients to close shops, and the weavers suffered financially as a result. Before the pandemic, the weavers earned the equivalent of $3 to $4 a day on average. When the first lockdown was implemented in March 2020, income from weaving was lost. Textile production came to a grinding halt. Without any daily income, some weavers chose to abandon their craft, and others were forced to borrow money from lenders at high interest rates. The Celo community, in cooperation with Impact Market, a crowdfunding platform built on the Celo blockchain, approached these weavers to pilot an anti-poverty program that uses mobile technology. Because most of the weavers did not own smartphones, they had to borrow phones from their children and then learn how to use digital currency. By offering their products to members of the Celo community in Germany, France, and the United States, the pilot was a success, with weavers receiving the equivalent of $955. Celo technology not only enables these weavers and small businesses like them to weather challenges, create more value, and sell their products globally, but it also inspires developers around the world to help grow the Celo ecosystem by building decentralized applications for artisans and entrepreneurs on the Celo blockchain. These examples are, I think, just the beginning of what Max Borders was speaking of in his Decentralist Manifesto, the social singularity. More is possible and is being developed. In fact, one of these developments will be discussed in the next video: decentralization, human flourishing, and the Internet of Things. Hopefully you feel you learned something good to know. If you did, hit the like button and maybe consider subscribing. More educational content can be found on the Good to Know website, domain goodtoknow.site. And thanks for watching.